Bismillahirrahmanirrahim. So the question we have today is about ratios, okay? And we have to find different types of profitability ratios, efficiency ratios, and the liquidity ratios as well. So this is from the recent paper of Feb March 2023 and IGCSA paper 2 variant 2, okay? So we have been, as always, we have been given the information. So I'll write down the formulas as well, and we'll do the working as well. Okay. So there is this person, Adia. Adia is a trader. She buys and sells one type of goods only. So one type of good only she buys and sells. That is Adia. She is a trader. She has provided the following information. She has provided the following information for the year ended to 31st October 2022. So we have been given the revenue following everyone. We have been given the revenue, purchases, expenses, other incomes. Okay, so this is for the year ended 31st October 2022. Then you have been given the the closing inventory at the end of your balances. So these are like the balance sheet items, the statement of financial position. That is, we have inventory as current assets, trade receivables at current assets, trade payables as current liabilities, and bank overdraft is also current liabilities, right? Getting it? So these are all
Yes, sir.
statement of financial position items that we have the current assets, that is inventory, trade receivables, and then we have some current liabilities as well, sir. That is trade payables and bank overdraft. Then they are saying the inventory quantity, whatever the inventory quantity is, and valuation at 31st October 2022 are double those at 31st October 2021. Okay. So this is a very important statement as well, which will help us understand what they are trying to tell us. Okay. It's a recent past paper question, a tricky one as well, because of this statement. So what they are saying is they are telling about the inventory quantity and valuation. This is an inventory valuation. This is the closing end of year inventory for at the end of year 31st October 2022. So which means, as always, we always find out what first, the year. So if the year is ending on 31st October, sir, it will be starting on 1st November 2022, right? And will finish on 31st October 21st November 2021. The year will start and will end on 31st October 2022. So they are telling the same thing, that the inventory quantity and valuation at the end of the year, these are double at those at the last year closing inventory. If the last year closing inventory is this will become the opening inventory as well. Okay, so we'll have to think about the double thing here in relevant with the respective question that we face. Okay, everyone with me following? Clear?
Yes, sir.
Yes, sir.
Guys got the information? Everyone got this? It's very important. Clear? So now the important thing will be that how do you find the gross margin? That is, complete the following tables. We have to find out the ratios for 9 marks. 4 ratios we have to find. First thing, sir, gross margin is a profitability ratio. Everyone with me? Sir, gross margin is a profitability ratio. And what is the gross margin about? The gross profit over the revenue or the sales. Okay, the gross profit over the revenue, gross profit over the revenue. That's it, gross profit over the revenue. So what we need to do is we'll have to find first out, we'll have to find the cost of sales. We need to find out the gross profit, because we already know, sir, we have been given the revenue, purchases, closing inventory. So, and you can easily find out the opening inventory now as well, which will give you the cost of sales. Everyone there with me following? So always remember, because we are learning here. So it will be, let's say first, the cost of sales formula. Everyone should know here the cost of sales formula. What is it? Cost of sales formula is opening inventory plus purchases minus the closing inventory. Got it? Clear? Understood? Opening inventory plus purchases minus the closing inventory. So how much opening inventory we have? We'll have to figure that out. Okay, getting it, students? So what we have, the closing inventory is 7,500, and the purchase at 62,305. So if this is double, which means opening inventory is basically 3,750. Okay, students need to understand that I can easily find out the opening inventory. They are telling this, that the inventory valuation at the end of there is double for the opening inventory. So which means that the opening inventory, which is at the start of the year, it will be what, student? $7,500 divided by 2. Okay, getting it, half of it. So that is the opening inventory. That is what you need. That is what is a lot of students will be confused about. A lot of students will be confused about this. So that is what we have done here. Okay, clear on this?
Yes, sir.
So that is what you have to work out. That's our opening inventory is 3,750. Purchases we already know. Its purchase are 62,305. Okay. Minus the closing inventory is basically double of it, that is 7,500. So I'm getting the cost of sales 3,750 plus 62,305 minus 7,500. I got that as 58,555. Okay, 58,555. Got that clear? Understood? Any problem?
Yes, sir.
Once you got the cost of sales, you will have to find out the gross profit. So we need to understand that revenue minus the cost of sales, revenue minus cost of sales will be the gross profit. Okay, getting it? Revenue
Yes,
minus
sir.
cost of sales will be the gross profit. So here we go. It will be simple, sir. $98,000 revenue minus the cost of sales, that is 58,555. That will be equals to 39,445 as the gross profit. Okay, 39,445 is the gross profit. And now you can simply do it, sir, that the gross profit over the revenue, gross profit over the revenue will be equals to our gross profit over revenue will be equals to our gross margin. Okay, so 39,445 divided by 98,000 into 100. It's coming, make sure we have to give the answers to 2 decimal places. So it's coming to 2 decimal places, that is 40.25. Okay, understood? Clear on this? 40.25 is the answer for this. Okay, so make sure, I would expect everyone to copy this and note these formulas and note this whole working so you understand and it is imprinted in your mind. Okay, I'll give you a couple of 2-3 minutes. Quickly do this. Okay, got it with me? Following? Then we
Yes,
move forward
sir.
to the. Okay. Okay, moving forward. Got this clear? Understood?
Yes, sir.
Next, again, after gross margin, what we have to find is basically the profit margin. So make sure understand the difference between gross margin and the profit margin. Profit margin, first thing, profit margin is also a profitability ratio. Okay, profit margin is also a profitability ratio based on the understanding of the profit and how to write down theory on it, how to do the analysis and explanation on the ratios. Okay, so profit margin formula is basically, it does not take into account the gross profit. It takes directly the profit for the year, that is the final profit. Okay, the net profit, you can say. So profit for the year, and that will be divided by what, students? The revenue. Okay, so profit for the year divided by the revenue, and that will be the profit margin into 100. Okay, understood? Clear? Following with me? Guys, clear? Now we
Yes,
need to
sir.
see how many. So we have the gross profit already. The gross profit was how much? The gross profit was 39,445. So you're going to start with there, that it was already 39,445 as the gross profit. And what do you do in the income statement? You add the other incomes. There is some other incomes, right, students? So we add the other incomes, that is 4,630, added the other incomes, and subtract the expenses, that is 31,188. Okay, and extract the expenses, that is 31,188. So I will be getting the net profit. Okay, everyone getting it? Other incomes we added, and expenses we are going to subtract. Okay, students, got it? Any other thing? No. So it will be the other income 39,445, and the gross profit at to 4,630 minus 31188. So I'm getting 12,887 as the net profit. Are you guys with me? Following clear? So here we go. 12,887 is the profit divided by the revenue. That is, how much is the revenue? Revenue was 98,000. Into 100, you will get the profit margin as well. Okay, students, everyone with me got that clear? Any questions? Let me know. Any problems, anyone? So I'm getting that as 13.15%. You have to give it to correct to 2 decimal places. Any problem? Am I audible? Can you guys hear me? Got it? This one should
Yes,
be
sir.
also clear, that in the gross profit you have to do this. Okay, so this one is done. And let me correct this one as well. It is 40.25. Okay. Next, what we have is the rate of inventory turnover. Students need to understand this is not a profitability ratio. This is recently added in the syllabus from the AS level. Now they are testing in the IGCSE O levels as well since 2020. Okay. So what we need to understand that this is basically a part of the heading of the efficiency ratios. And everyone knows the meaning of efficiency, that you want to know, or Adia, the person, the owner of this business, she wants to know whether her business is working effectively in planning, production, and everything is going smoothly or not. Is it efficient or not? And that is why the rate of inventory turnover formula is there. So what is the formula for rate of inventory turnover? Anyone knows rate of inventory turnover formula? So we have 2 types of formula for rate of inventory turnover, whether we are finding it in the days, number of days, or whether we are finding it number of times. Okay, is everyone getting it clear?
Yes, sir.
There are 2 formulas for rate of inventory turnover. It depends whether we are finding or in the number of days or the times. Okay, so usually rate of inventory turnover is find in times. Agar wo nahi aapse kare, if the examiner is not saying anything, it means you have to find it in the times. And what does this ratio means? We have talked about it previously as well. It simply means how many times you can sell your inventory in an year. Okay, how many times Adia can sell her inventory in an year, how many times the orders of the inventory is made, and how many times she is able to sell the inventory. Okay, getting it? So the formula for the rate of inventory turnover is basically simple. That is the cost of sales divided by the average inventory. Understood? Cost of sales to be divided by the average inventory. Everyone there with me? And that will give us the answer in times. Okay, students? Average inventory, cost of sales divided by average inventory is equals to times. The answer will be coming in times. Okay, everyone getting it? Following? And in some other question, we will try to do the opposite, 365. But if you have to find in days, we'll do that as well in any other question. Okay, but not for now. Got it, everyone clear? So we already know what is the cost of sales. Sir, the cost of sales was 58,555, right? Everyone there with me? From the previous part, you can take help from it, right, students? Cost of sales is this now. Hello. And opening inventory is this, and closing inventory is this. So here we go. Understand that you're going to take help from the previous part. And 58,555 is your cost of sales that will come in the numerator. Is everyone there getting it? And in the numerator, students, I'll repeat, in the numerator, students, we have to put the cost of sales, that is 58,555. And in the denominator, what is average inventory? Write down the formula for average inventory as well. Guys with me, following?
Yes, sir.
The formula for average inventory is opening inventory plus the closing inventory divided by 2. Okay, average out. Opening inventory plus closing inventory divided by 2. This formula will work when you're finding out in the times. Okay, that how many times the inventory is sold in an year. Okay, everyone got it? So we already know that what is our opening inventory. That was 3,750, half of it. and this was double. Closing inventory was 7,500, right, students? 3,750 opening inventory, 7,500 closing inventory, everyone there. And you divide that by 2. Whatever that comes, that is your average inventory, sir. And that will be the answer. Okay, everyone got this with me following?
Yes, sir.
Yes, sir.
Any doubts, anyone? Let me know. So it's coming 10 something 2 decimal places. So 10.41. So I can write it down here 10.41 times, which means that the owner Adia is able to sell her inventory in a year 10 times. Okay, almost 10 to 11 times she is able to sell her inventory. Okay, everyone got this? Clear? Any questions? Let me know. Any problems? So we'll help out. Okay, got this? Clear? Then everyone knows about the liquidity ratio. That is basically about the liquid asset test ratio. It's the word itself suggesting that we have to find the liquidity ratio. Getting it clear? Understood? Following that? Guys, clear?
Yes,
Yes,
sir.
sir.
To find the liquidity ratio, which talks about the cash management bankruptcy and are you able to pay off your trade current liabilities with your current assets that you have? How much financing? It talks about those lines, liquidity ratio, that hope making sure that you are not bankrupt or insolvent. Okay, so here we go. Liquid asset test ratio is basically all the current assets you take in. All the formula is all the current assets you take in except for the closing inventory. You minus that in the liquid ratio and you divide that by the current liabilities. Okay, getting it, students? With me following? Clear? Hello?
Yes, sir.
Yes, sir.
Okay, any doubts? Any rate of inventory turnover formula? Yep, go on, I'm listening. Any questions? So what we have is basically you are not going to take inventory for the liquid asset test ratio. You're only going to take trade receivables because we only have 2 assets and we only have 2 liabilities. Okay, students? Because we have only 2 assets, 2 liabilities, so it will be 9,240 as the current assets only. That is the trade receivables. Do we have any other prepaid income or anything else? Prepaid expenses? No, right? There's other income is part of there. Make sure students, a lot of students make the mistake of taking opening inventory as well as an asset. You never take opening inventory in this formula. Okay, you never take opening inventory in this formula. So make sure opening inventory should not be included. Only trade receivables will be written and we will ignore the inventory for this formula. Okay, getting it? And what about the current liabilities? It's simple, sir. For the current liabilities, it will be the trade payables and the bank overdraft being added. So it will be 5,365 with me, 5,365 plus 5,135. Okay, 5,365 plus 5,135. So make sure give the examiner the correct value of the trade payables, sorry, current assets and the current liabilities as well. Okay, so it will be 5,365 plus 5,135. That is 10,500. Always remember, if they're going to ask you a ratio question, theory analysis will be coming in together. That is what we'll have to work it out as well. So it will be 0.88 ratio 1. Okay, got it, everyone? Clear? It will be 0.88 ratio 1, which means for every 1 current liability, there is less than 1 current asset available. For every 1 current liability that you have to pay, there is less than 1 current asset available. Okay, less than 1. The ideal ratio is 1:1. I will explain it in the later part if you have theory. See if everyone got this working. Make sure there's only 9 marks. Still 11 marks are left. Okay, hope everyone is getting it clear. So make sure take a look at it, copy them down, write down the formulas at least. Okay, rate of inventory turnover in times. How do you find it? It's basically cost of sales divided by average inventory. How do you find average inventory? It's the opening inventory plus the closing inventory divided by 2. Okay, got that clear? Understood? Following?
Yes.
Everyone got this?
Yes, sir.
Yes, sir.
Okay, giving you 1 or 2 minutes to copy this and look this down. Okay. Yep, got it. Clear? Any questions? Hello, got this?
Yes, sir.
Okay. Next,
Yes,
what
sir.
we have is how we have to compare the ratios always. It will be about talking about comparing ratios. So let's use the values that we got and start comparing the ratios, doing the analysis on them and making the comparisons. Okay, with me, everyone following? How do you do that? Let's do. Okay, everyone there got it? Clear? Guys
Yes,
following?
sir.
So we have Adia purchases price. Adia's purchases price has remained constant throughout both years ended 31st October 2021 and 2022. The following information relates for the year ended 31st October 2021. The gross margin was 37.60, profit margins were 14.85%, rate of inventory turnover was 12 times, which means she was able to sell inventory 12 times, and liquid asset test ratio was 1.5 to 1 ratio. Okay, everyone got this? You have to comment on the changes in the gross margin and the liquid asset test ratio. Okay, for 2 marks only. Students got it? Clear? Understood? So it's like very simple. For just only 2 marks they have asked. Are you guys there with me following? Okay, so let's talk about first the gross margin. If we talk about the gross margin in the last year 2021, it is 37.60%, and in the current year which we are, it is increased to 40.25%. Everyone getting it? We have found out ratios for which year, student? We have found out ratios for 31st October, or let me write it down so everyone get this. These are for 2021 October, and 2022 October is 40.25. So how will you comment on this? Always remember the first comment is basically very simple. You will have to write the gross margin has improved. Everyone getting it? The gross margin has improved, right? It is increasing now. The gross margin has improved. Everyone with me? The gross margin ratio
Yes, sir.
from has improved from 37.6% to 40 to approximately to 40.25%. One comment will be this, and you will get 1 mark for this, that the gross margin has improved. And as we always say, that you have to give the reason, you have to complete your statement. The gross margin has improved from 37.6% to 40.25%. What is the reason for this? It might be because of, and you can't give the reason, okay, the purchase price has remained constant. So if the cost of sales section doesn't help you, the cost of sales section doesn't, what will you will take help from? How did we calculate gross margin, students? We calculated from the trading section, right? हमने trading section को देखा था, income statement का जो revenue, opening inventory, cost of sales, purchases. Well, they are already telling us that the purchase price, the Adia who took supplies from her suppliers, they charge her the same price in both the years. तो purchases से कोई benefit नहीं हो, आपकी cost reduction नहीं हुई. It means that you have increased your revenue maybe by reducing the selling price. Okay, getting it? So you can write down the reason that the gross margin has improved because of the selling price. The selling price जो होगी वो increase हो गई होगी, या trade discount because of increase in revenue. So we can write down that because of increase in revenue. Getting it? Because of increase in revenue due to increase in selling prices, or we can say due to increase in selling prices. Following, students? Any other
Yes,
reason
sir.
you have for gross profit margin to be increase, improving? So what will be the reason for a gross profit margin? So आपने अपनी selling price को increase करा होगा to increase your profit, okay, to increase your gross profit margin. So आपने maybe selling price was increased. We can write this, okay, and there was we can say cost of sales has decreased. Okay, yeah, the other point, the opposite point will be के due to inventory basis, inventory में increase आया होगा. Everyone getting it? Increase in inventory. Hello, guys following? Increase in inventory might have led to increase in inventory, might have led to increase in gross margin. Okay. Let me know if anyone did not get it. It's basically calculation wise, okay? It's basically calculation wise. Yes, any questions, any doubts on this explanation? Let me know. Everyone got this?
Yes,
The
sir.
first reason of gross profit margin being improved is that you might have increased your revenue by increasing the selling price, okay? Secondly, because purchases are not moving, but we can still say that the inventory, that there might be an increase in inventory, and that is why there might be an increase in inventory, which might have led to the increase in the gross profit as well, okay? Got this clear? Next, we have the liquid asset test ratio. So what you have to write, it was 1.15 last year, 2021, it was 1.15 to 1. Now it is 0.88 to 1, sir, okay? So now it is 0.88 ratio 1. So what we can say is that the liquid test ratio has not, it has worsened, right? The other word can be that the liquid test ratio has worsened or reduced. The liquid test ratio has worsened. Previously, what we can say, previously for every one current liability, there was 1.15 current asset available to pay for it. Everyone getting it? The liquid ratio has worsened because of the fall. You can see that there's a fall. The liquid ratio has worsened because you can say simply, you can do it mathematically as well. We can clearly say this ratio will worsen because of the increase in the denominator. So the liquid ratio has worsened because of increase in the current liabilities. Getting it? Increase current liabilities jitni increase honge, you will have less asset to pay for it. So because of the increase in current liabilities, you can say, students, the liquid ratio has worsened because the current liabilities have increased. Everyone getting it? And you must make sure you can write down this point as well. The ideal ratio is 1:1, that you must have for every one current asset, you must have one current, for every one current liability, you must have, students, one current asset, which was excessive in this and which was lower in this. So it's not the ideal situation, okay? The ideal ratio is 1:1, which is not achieved by Adia, which is not achieved by Adia, which is not achieved by Adia, maybe due to funds being tied up, which is not achieved by Adia, due to funds being tied up, due to funds, क्योंकि इसका बैंक भी overdraft है, right? Due to funds being tied up, okay, we can say कि bank overdraft है, students. So due to funds being tied up in some other assets, being tied up in the inventory, okay? Due to funds being tied up in the inventory. Got it, everyone? Clear? बिकॉज इन्वेंट्री इज द लीस्ट लिक्विड, इन्वेंट्री को टाइम लगता है सेल करने में, तो इन्वेंट्री जो है वो लीस्ट लिक्विड होती है, इसलिए हम इसको भी सबट्रैक्टेड, स्टूडेंट्स. द रीजन फॉर कैलकुलेटिंग दिस रेशियो इज टू सी हाउ मच इज द करंट asset ratio is with the current liabilities. If we remove the least liquid item, that is the inventory. If we remove the inventory, what is which situation we are standing on? Getting it? So that's what you have to write down, 2 good points with complete explanation, and that will be great. Okay. Clear on this? Any questions? Let me know. Got this?
Yes, sir.
Next we have, so this was 13 marks. Still we have a couple of more understand questions here. Now we have to write down analysis as well. Adia is concerned about the increase in inventory over the year to 31st October 2022. She is considering reducing her selling price and to increase the quantity of goods she can sell. So you have to advise Adia whether she should reduce her selling price or not. We have talked about this question previously as well. It's again the same type of theory and analysis, that whether you would advise to reduce her the selling price or not. So you can say that reducing selling price does not guarantee, reducing selling price means reducing selling price does not guarantee her the customers, right? Reducing selling price does not guarantee her increase in the quantity of goods, does not guarantee her increase in customers' orders, does not guarantee her increase in customers' orders. Getting it, guys? reducing selling price does not guarantee her increase in customer orders or the quantity. Are you guys with me following?
Yes, sir.
And what will happen if you are first going against? You have to write first against. Everyone getting it? First, you have to write against this question. So what will, if you're writing it, that it might not be suitable. Everyone getting it?
Yes, sir.
Think about it, whether she should reduce her selling price or not. So if she is reducing her selling price, it might not guarantee the increase in customer orders quantity. Getting it? She should be working on in managing inventory. Okay. Are you guys getting it? How to manage the inventory using the effective measures and the types of different production which reduces the wastage and cost. Okay. So you should write a couple of more points. That any other points anyone would like to share? So Adya should manage the inventory levels. Adya should manage inventory. Adya should manage inventory levels to reduce the cost, to reduce the warehouse and the storage cost. Okay, to reduce the storage cost and to reduce the storage and warehouse cost. So whenever inventory, we are talking about the storage cost and warehouse cost comes into existence. So Adya should manage inventory levels to reduce storage and warehouse cost. Guys, getting it? Everyone following? If she is reducing the selling price, it will help her reduce the storage cost and warehouse cost. Okay, it will reduce the inventory as well, and it will also increase the total quantity, right? This will increase, if she is managing inventory levels, it will increase the total quantity being sold. Okay, everyone getting it clear? Guys, any points you would like to add, anyone, about reducing selling price or not? Make sure first thing you should be clear about it, what you have to write on. You have to write whether she should reduce her selling price, some points on that. So you can say that points for reducing the selling price will be that if you reduce the selling price, it will help her increase the total quantity and it will reduce the storage and warehouse cost. Are you guys getting it clear? It may increase the total cash received from sales. Okay, it will also reduce, agar aap selling price reduce karenge and there will be more inventory sold, it will reduce the risk of the theft and the damage. Okay, obsolete hone ka. Everyone getting it? It will reduce the risk of the theft and damage. Agar aapki inventory early sell ho rahi hai, it will reduce the risk of theft and the goods being damaged. Everyone getting it? Following?
Yes, sir.
Guys, following goods being damaged, obsolete. Okay, the proper word for it. So this is, if you are giving the recommendation that the selling price should be reduced because it will help her reduce the risk of theft and goods being damaged, inventory will be sold quickly, more quantity can be sold, and it will help reduce the storage and the warehouse cost as well. So this will be couple of 3-4 lines on reducing the selling price. Then why you should not reduce the selling price? Okay, so this is my point. Okay, going against it, okay, it does not guarantee. Okay, might be the cash problems if you are reducing the selling price. So I'll write it red in again. These are for the for. Okay, for reducing the selling price, the blue and black one for, and now I'm writing again on the against because it's just not the perfect answer. Just have to make it in a proper paragraph form. Okay, so if you're writing against it, that she should reduce the selling price will not guarantee her increase in customer orders and quantity. What should be the case here? Okay, if you are writing against the reducing the selling price, so Adya should not reduce the selling price because it does not guarantee whether the customers will be willing to pay or not. Okay, the other type of thing you can write in this is that customers might not be willing to pay the price. Okay, definitely, if you reduce the selling price, what will happen? Increasing the selling price was increasing the gross margin. Reducing the selling price will mean, students, what? That it will reduce the gross margin. Okay, reducing selling price indicates, reduction indicates fall in the gross margin as well. Okay, following, students? Hello. So therefore,
Yes,
my
sir.
advice now, you should make sure give an advice. So Adya should not reduce the selling price. Adya should not reduce the selling price. According to me, 1 mark is for your decision. Should not reduce the selling price because she is only selling, what my point of view is, because she is only selling one type of good, it's better to do diversification. Okay, Adia should not reduce the selling price and better to diversify the products. Okay, so that I am concluding on better to diversify the product offerings. Okay, to increase the revenue, better to diversify the product offerings. Okay, got it, everyone? Clear? Understood, guys? Hello, is everyone clear?
Yes, sir.
Yes, sir.
Yes,
And then
sir.
one more question of 2 marks, that one of the limitations of financial statements is that there is a gap between the end of the financial year and the preparation of financial statements. A very important valid point, that they are saying that one of the limitations or one of the drawbacks of financial statements, there is a gap between the end of the financial year and the preparation of financial statements. Explain how this limitation may influence Adia's decisions about whether or not to reduce her the selling price. Are you guys getting it? Yep. Explain how this limitation will influence, because there is definitely a gap period between the when the financial statements are made and when the year ends. Okay, so how will she take into this account? How will she take this into account as a sole trader for her decision making ability about whether to reduce the selling price or not? So what do you think? So this will, the limitation, it his Adia's decision will be influenced. Adia's decision will be influenced, as we see the adjustments are there. Adia's decision will be influenced based on the inventory levels available. Okay, so make sure, it's important to understand that the inventory matters a lot to her at this stage, that Adia's decision will be based on the influence of the inventory levels, will be based on Adia's decision will be influenced by the inventory levels available at the end of the year. Inventory levels available at the end of the year. Following, her decisions will be influenced by inventory levels available at the end of the year and the transition period, getting it, held at the end of the year, and the present date. She also, what other factors can be taken into account? This limitation, inventory, how much was the inventory at the end of it, and the preparation of financial statements date pe how much was the inventory, and the present date. Following, students. And the other thing, she can look into it. Always remember that it is the end of financial statement and the preparation. So she can consider profit as well. Okay, she can consider the profit as well, how much profit she have made at the end of the financial year, and she can consider the amount of revenue and the profit made between the time period. Okay, she can consider the amount of profit and revenue made by the sales. Getting it, everyone? She can consider the amount of revenue and profit made during the period. Okay, during the period. Okay, what I mean by the period, the end of the financial year and the preparation of the financial statements. Okay, getting it, students? Clear on this? With this theory finishes. So in this question, it was 11 marks theory analysis and only 9 marks question. Okay, in this question, it was 9 marks only numerics and 11 marks theory. Okay, everyone got this clear? Let me know. Everyone following? Any questions?
Yes, sir.
Any problem, any doubt? Let me know about this. Okay, clear on this? No issues, no problem.
No, sir.
Okay. So then let's do another question, which is also related to this, that is about company accounts. But in this, we have to learn more about it. We have to calculate the liquid asset test ratio and couple of more understanding about the company accounts. So let's have an idea about that as well. Okay, it's a recent paper of May, June 2023, paper 2, variant 1. Is that okay with me? Following? Once we have done the ratios question. Okay, any doubts in the ratios question? Clear on this?
No, sir.
Now you can attempt all the ratios questions. Okay, students, you can attempt all the ratios questions wherever you were struggling. So go back and attempt that question. Yep. Okay. So should we start with this question as well with me? Following? Are you guys there? Following? Hello?
Yes, sir.
Can you hear me?
Yes, sir.
Okay. Just read the question quickly. It's based on company accounts, but ratios is also coming in it. and we can have more understanding and learning about the company accounts as well, involving ratios and in general as well. Okay, students. Okay, so this question is from May, June 2023 and paper variant 21. Okay, so we have done May, June 2023 paper weight 2 and variant 1. So it's one of the recent papers, so make sure follow carefully. A lot of theory and numerics will be tested in this. Okay, so we have Q Limited, a company who prepare its financial statements to 31st March each year. So we have clearly an idea here that, sir, the year starts on 1st April and ends on 31st March, right? Everyone getting it clear? Following with me? Okay. The company's retained earnings at 1st April 2022 were $16,250. Are you guys there? The company's retained earnings at 1st April 2022 were 16,250, and we have a discussion already. What is retained earnings? It's basically the profit reinvested back in the company, the profit during the year, and how much is retained back for the company for future purposes, okay, future expansion and those things, okay. So this is the opening balance of the company's retained earnings at 1st April 2022, that is $16,250. The financial statements are to 31st March each year. Getting it clear? End of the year, 31st March. Okay, everyone with me following? So we are dealing, if we have to require, the first thing is calculate the retained earnings of Q Limited at the end of the year 2023, 31st March. Okay, students getting it? Guys following, which means that we are starting the year on 1st April 2022 and ending it on 31st March 2023. Okay, getting it clear? Following 1st April 2022 and ending on 31st March 2023. Following, is that okay, clear? Hello?
Yes, sir.
Yes, sir.
1st April 2022, the year starts. That's why they have given 16,250. During the year ended 31st March, very basic concepts. During the year ended 31st March, the company made a profit of $43,500 after charging all the expense and interest. After charging all the expense and the interest, okay, and the total dividends are 39,000. The total dividends of 39,000 for the year were paid by 31st March 2023. Everyone with me following? Clear? So it's very simple, students, without even looking at the question for just 3 marks. This is very basic level. They ask this in the AS level with a completely different approach. You don't have to do any interest, anything. Always remember what they're asking is that the statement of changes in equity that we have talked about in one of the previous questions, statement of changes in equity, extract of the retained earnings section. Okay, everyone, extract of the retained earnings section. Okay, everyone there with me following? Extract of the retained earnings section. So it's very simple. Always remember, you will start with the, let's make a column here. Okay, so everyone gets this. Okay, so it will be simple. You will start with that, sir, the opening balance. Opening balance is how much? 16,650 at 16,250 at the start of the year. Everyone with me following? This is the opening balance. Balance at 1st April. Balance at 1st April 2022. Everyone got it? Make sure at the start of the year, then what you do, you add the profit for the year. Students, is everyone there with me? You add the profit for the year. Guys following? You add the profit for the year. How much is the profit for the year? It's 43,500. Okay, understood? 43,500 is the profit for the year. And how much is the dividends? The dividends are, you subtract the dividends. Okay, everyone there following? And that's how you will get the 3 marks. Is everyone there with me? That is the format, and that is how you need to understand the basic working exactly, that you have to subtract the dividends as well. That is 39,000 were paid in the dividends. So we get the closing balance. Okay, please make sure copy this format. It's the opening balance of retained earnings. You add profit for the year in it, and then you close down by subtracting dividends, and it will be the closing balance at 30th 31st March 2023. Make sure to do the calculation for this. Everyone got this clear? So it is 16,250 plus 43,500 minus 39,000. We got this as 20,750. Everyone got this clear? Following, guys? Come on, I need response. Everyone clear? Make sure. Do understand? The format is important because they are talking about statement of changes in equity in this, okay? Clear? Everyone understands?
Yes, sir.
Yes, sir.
Have a
Yes,
look
sir.
at it, okay? We have to make balance sheet next. Have a look at it, okay? Yeah. So we need to understand that in retained earnings, the profit for the year is added, sir, and dividends are subtracted to reach the closing balance for the year. And this is what we have to do next as well, in which we have to make an 8-mark statement of financial position for our company accounts. So make sure learn the format here. You can learn the format as well from here, as well as how to, if they ask you to make a statement of financial position for the company, you know how to make it. Okay, everyone getting it for Q Limited? With me following, guys? Hello?
Yes, sir.
Any questions, any doubts? Let me know any problems. Okay, so let's start and let's do it. So how do you make it? Now we'll read the other information. The following balances were extracted from the company's ledger accounts after the income statement has been prepared. So the income statement is already prepared, and now we have to take into account fittings and equipment depreciation for that, motor vehicles depreciation for that, inventory balance at bank, trade receivables, provision for doubtful debts, trade payables, 5% debentures that are long-term liabilities, bank loan, long-term liabilities, and ordinary share capital. Okay, everyone there with me following? Clear? So here we go. Let's start. So always remember, first you will start in a statement of financial position with the non-current assets. Getting it, guys? You will start with the non-current assets. Is everyone there following? You will start with the non-current assets, okay? And it will be the cost, depreciation, and the net book value that you have to show, okay? Is everyone with me following? Cost, accumulated depreciation, and the net book value. Guys, I need response. Getting it clear? Following?
Yes, sir.
It will be fittings and equipments as the first heading, fittings and equipments. And you will copy that down there. Make sure it should balance as well. There are no adjustments. That's the good thing. Fittings and equipments and motor vehicles. Okay. So we're going to put their cost and depreciation and find out the net book value. So here we go. It will be 150,000 and 72,000 as the cost. So here we go, sir. 150,000, the cost of the fittings and equipment, 72,000, the cost of the motor vehicles. And then we have to do the depreciation, that is 40,650. And here it will be 31,125 falling. And then you will get it, the net book value. Okay, everyone got this clear? So it will be subtract the depreciation, subtract 40,650 from 150,000 to get to the net book value of fittings and equipments, and do the same for motor vehicles as well. With me, everyone got this? 150,000 minus 40,650, that is 109,350. 72,000 minus 31125, that is coming as 40,875. Make sure you understand the format as well, okay? 109,350, 40,875. Add both of them, and you will get the net book values of both the assets or the non-current asset value. Okay, students? Is everyone clear with me? Following? Any questions? Let me know. These will also be added. This is part of the format, okay? But they will be finished here only. They will be finished here only. 150,000 plus 72,000. So the total cost of the assets were, sir, 222,000. The total depreciation for the assets were Guys, are you there with me following? 71,775. And the final net book value after subtracting the net depreciation from the net book value was basically this. Okay, got it? Clear? Understood? Everyone clear? Understood? Got this? No problem, no issues? Guys, got it? Clear? Come on, can I get response so I can move forward? Everyone with me following?
Yes, sir.
Yes, sir.
Okay. Next, we have to find out the current assets. Okay. Current assets. Okay. So it will be current assets. We'll put the heading on and then we'll put the current assets. So we have inventory, trade receivables, but we had a provision for doubtful debts. So make sure we have to be very careful about this here. So it will be inventory and trade receivables according to the format. Okay. So it will be how much inventories we have. Inventory is 51,790. Okay. So inventory will be 51,790. You'll write it down here only. And then the trade receivables and subtract less provision for doubtful debts from there. You will have to also show that according to the format of the company. Okay. Got it? Provision for doubtful debts. You will subtract it here only. Okay. Getting it, students? Clear? So we have to trade receivables 19,700. Are you guys with me following? 19,700 minus the provision for doubtful debts, that is 591. Then you will get the net receivables, which you will put here. Okay. Got it in the second column. Okay. Everyone with me got that? Any questions? Let me know. So it will be 19,109 as the trade receivables, inventory. And do we have bank? Yeah, bank is positive 1076 debit. So bank will be added as well, 1076, the bank column. And here we go. This will finish all the current asset, students. Anyone in doubt? And we will get the total assets column as well. Okay. Understood? Clear on this? Following?
Yes, sir.
51,790, 19,109 plus 1076. So it will be 71975. And you are going to add, students, in this the other non-current assets. So we will get 222,200 as the total assets. Okay. Everyone with me following this? Clear? Any problem? Hello, got this? Any questions? Any issues? Any problems on this? We got total assets. And then we will start. Any doubts in the asset section? Make sure non-current assets plus the current assets you have to do. Okay. Non-current assets plus the current assets you have to do. Is everyone clear on this? Clear? Following? Sure, got it, no problem. Guys, got it till here? Then we have to do the equity section. That is, the equity will be, if we talk about the equity section, it will be starting with the equity section. Now, here we have to understand and learn that what comes in equity. So we have to take ordinary share capital. So make sure ordinary share capital will definitely come in. $120,000 as the ordinary share capital. You always start with that. There is share premium as well, but let's see if they have our share premium they have given us. No, so it's only ordinary share capital in the equity section. Okay, students. And if you don't have any other items, so just make sure go for the retained earnings. That also comes under the heading of equity. Okay, everyone. So we'll add the retained earnings in this. Okay, any doubts, anyone? And what is the retained earnings figure for the end of the year? 20,750. Okay, everyone there with me? So 20,750 will be added in the retained earnings. This will be the call. This will be the total equity amount. Okay, got it? Any questions? Any problems? Let me know. So it will be 120,000 plus 20,750. It's very easy company question. Okay, 140,750. Okay, students. When we got this, we are going to go to the non-current liabilities now. That you have to figure out non-current liabilities that are more than for an year, and that will be definitely debentures and anything that is more than for 2023. Okay, so we have non-current liabilities as bank loan and 5% debentures. Okay, students, is everyone there with me following? So we have 40,000 for debentures and $10,000 as the bank loan Is everyone there following?
Yes, sir.
So make sure write them down that you have debentures at 5%. Debentures at 5%. Already the interest is deducted, and you have bank loan as well for the future. So because we are in the current year, which year we are, sir? We are at the end of 31st March 2023, and this we have to pay in 2027, and this we have to pay, sir, in 2029. So all of them are long-term liabilities for more than 1 year. We'll have to add these as to these two as well and give the value that this will be coming, sir, 50,000 in the long-term liabilities, 50,000 for long-term liabilities. And the last will be the current liabilities, in which we will have the current liabilities. We'll write it down. And current liabilities are basically, as we already know, current liabilities are basically what? Only trade payables are available for, that is 31,450. Okay. So it will be 31,450 for the current liabilities. Okay. Got it, students? This will be trade payables. Okay. Clear? Is everyone clear? And when
Yes,
we
sir.
should add them, we should get as the total equity and liability, then it should balance as well. So let's try if when we add them, are we getting the same answer? Yes, we are exactly, it is exactly matching. So make sure you quickly do that and write it down that they will exactly match. Okay, everyone got this clear? Add them 140,750, 50,000 plus 31,450. So this is matching. And make sure to write down total equities and liability, total equity and liability. That's how the balance sheet will be made. What they are looking for is formatting, and you have put the correct wordings, correct letters, correct numbers in the correct places, and you will get 8 marks. Okay, students, everyone got this? As this is recent paper, May, June 2023, paper 2, variant 1. Everyone got this clear? Following? How do you make the balance sheet for this? Up till now,
Yes,
we have
sir.
got 11 marks already in the numerics. We have done 11 marks numerics. And now, which means the 9 marks will be, again, you can expect, we can clearly see here that sometimes 50-50% split is there. Okay. So today's class was most probably about understanding of theory as well. So calculate the liquid asset test ratio for those who have understand clearly and have got an idea now. So it will be very simple. What is the formula for liquid test ratio? We have done at the start of the class. Current assets minus the inventory divided by the current liabilities. So this is the ratio they have there. So they are testing ratios as well, very slightly, but they are still definitely testing it. What this means is, so what we can do now, simply understand, don't have to be, just have to save time, do smart work. You already know what is the total of the current assets, right, students? We already know what is the total of the current assets. So I'm going to take the current assets and just going to remove inventory in this case. Everyone with me? 71,975 will be subtracted by 51,790. Okay, 51,790. So you'll subtract inventory, and already we know the current liabilities figure, that is only trade payables, sir. Trade payables are there only. Everyone with me? Follow the highlighter. Follow the highlighter, students. 31,450 is only the current liabilities. Total current assets are these. I minus the inventory, the closing inventory from them. Okay. Is everyone with me? Got this? Guys, clear? Understood? And so whatever the answer comes, that is 2 marks for you. Clearly, quickly. Okay. Is everyone clear? Guys, can I get response?
Yes.
So we are getting this is 2 decimal places, 0.64 ratio 1. So again, this is not the ideal ratio, less than 1. Next, we have a couple of more theory, might be analysis as well. The directors who are also the shareholders. Okay, so the directors, are the owner, the shareholders are the owners of the company, and in this case, both the directors are also the shareholders. In this case, they would like to expand the company and wish to borrow $50,000 to fund the expansion. Okay, so the directors would like to expand the company and they would like to borrow again $50,000. They are considering whether to issue further ordinary shares or to request another long-term bank loan. Okay, is everyone with me? They are considering whether to issue further ordinary shares or to request another long-term bank loan. Okay, getting it clear? Following? Understood? So we have to suggest, and everyone knows that what are the reasons. Suggest two reasons. We have to suggest two reasons. Suggest means that you can explain why, although the company has made a profit, there is little cash available in the bank account to fund the expansion. So let's have a look at it. Although the company has made a profit for $43,500, students, they are telling us that the company has made, very important question, very realistic, and you can just look the answers here only. It's written, the answer is in this page only. Let me know, they are saying that the company has made the profit, but still their balance at bank is very small amount, that is 1,076 debit. So what, so you have to suggest two reasons for this. Is everyone getting the question? That although the company has made a profit of $43,500, a very good question, but there is only little cash available in this bank account. So anyone can tell me the reasons why there is little cash available in the bank account to fund for the expansion? It's very simple, two reasons. Let me know, anyone. Come on, anyone, any questions? Why could be little cash available in the bank account? You have to suggest two reasons. Although the company has made a profit, one of the reason is very simple here only. Come on, guys, anyone would like to share? From 43,500, we can clearly see that in $39,000 is the dividend paid, right? So the company has paid dividend. Q Limited have paid dividends, okay? And that is why we can see very less balance, okay? Q Limited have paid dividends, students. So you can write this point as well. Q Limited have paid dividends. And then there will be also the repayment of the loan interest, okay? Repayment of the long-term liabilities, repayment of long-term liabilities and their interest. तो डेफिनेटली आपका कैश जो है वो रिड्यूस हो जाएगा. एवरीवन गेटिंग इट? रीपेमेंट ऑफ लॉन्ग टर्म लायबिलिटीज एंड द इंटरेस्ट टू बी पेड ऑन दैट. Guys, everyone following? And the interest payments. Hello, are you guys following, everyone? You can also write, is everyone there? We can clearly see that the company have a lot of heavy assets, which makes it clear that they might have purchased capital expenditure or purchase of the non-current assets, and that is why the cash balance is low now, okay? Purchase of non-current assets, okay? Is everyone getting it? So these are the common points that you can write, but there will be more as well. But one of the most common should be that the dividends were paid. That should be your first reason, as we can see clearly out of the profit. Can I get response? Anyone there following? Nobody's responding now.
Yes, sir.
Out of the profit paid, there is completely 39,000 is dividends only. Getting it clear? Following that? And then, as always, 5 marks for the advising the directors whether they should fund the expansion by issuing ordinary shares or requesting a bank loan, okay? And we have to justify our answer. So it's very simple and very clear that already two is already available. Debentures already taken, the bank loan is taken. So my advice and my explanation will be that the directors should fund the expansion on ordinary share capital. The directors should fund, this will be my decision as well for 1 mark. The directors should fund the expansion by issuing ordinary shares. Why, sir? By issuing ordinary shares because of more shareholders will be buying the share. It will increase the market value. It will lead a good impression as well for the business. Everyone there getting it?
Yes,
Why
sir.
should the company issue ordinary shares? Let me know the reasons for that. The directors should fund the expansion by issuing ordinary shares because there is no collateral. There is no requirement of collateral. There is no requirement for collateral or security. There is no requirement for collateral or security. No interest payments. Okay, getting it? Following? No interest payments. This question we have also done, that basically they are asking us whether to fund from the debt or whether to fund from the equity or the debt. Okay, debt financing or equity financing. No interest in equity financing. There is no interest to be paid in equity financing. Students getting it? There is no interest to be paid in equity financing, okay? And there is it's just that shareholders will expect dividend. Okay, shareholders will expect dividend from the company. Okay, shareholders will expect dividend from the company if you issue ordinary shareholders. Everyone with me? Following? So these are the points that you should write why you will issue the ordinary shareholders, that you should issue ordinary shareholders. But there are some problems as well. Okay, let me explain that, otherwise it will be less space then. Okay, we can already also say that it's not sure that whether all of the amount will be raised. It is not confirmed whether all the $50,000 can be raised. Okay, no confirmation on whether all 50,000, or no guarantee on whether all $50,000 can be raised or not. No guarantee of all 50,000 to be raised by equity financing, or by raising the issue, by raising the shares, by issuing the shares. Okay, so there is no guarantee, and there might sometimes the problem came, although it's a public limited company, it doesn't come much in this, but the more it goes public, the more the problems will be. So it may dilute ownership and controlship. Okay, may dilute the ownership and control. Some control problems or ownership problems can come. Okay, getting it, everyone? Clear? And then you can write down some points for requesting a bank loan. Okay, bank loan can be available quickly. Okay, everyone getting it? The bank loan can be available quickly, and interest will be charged, security will be charged. Okay, bank loan might be available quickly. Everyone getting it? Bank loan might be available quickly.
Yes, sir.
Similarly, the bank might not be willing to give it because already उसने bank loan से लिया हुआ है जो कि 2027 में repay करना है. The bank might not be willing to, or you can see clearly, bank ने only $10,000 दिए हैं. Debentures ने 40,000 दिए उनको non current liabilities में, लेकिन the bank loan have only given 10,000, which means bank is reluctant. Bank 50,000 finance नहीं देगा, and that's why you can write the last point as the directors should fund the expansion by issuing ordinary shares, because the bank might be reluctant to give the loan, as already the loan is of $10,000 and the company, the director, needs to raise $50,000. So the better option is going for issuing ordinary shares. Okay, getting it? Clear?
Yes, sir.
Bank loan might not be available, so you can write down points के bank loan funds each ordinary shares से maybe jaldi quickly मिल जाए funds. Okay, and interest will be needed. That's the point. Payment of the loan will be required as well. There is no such thing in issuing ordinary shares. You will raise the capital, you will get more cash, it will help you. Yeah, you can also write this will help you. Issuing ordinary shares will help you in raising cash as well. Your liquidity position will become strong as well. Bank loan will reduce your liquidity position, will worsen your liquidity position. You can write these points. Okay, when you are issuing ordinary shares, it's just the dividend need to be paid at the end of the year, but there's also based on the company director's decision whether they want to pay dividend or not, or want to save it for the future purpose. We have talked about dividends as well. And with perspective to bank loan, the good thing is only even if the company fails and goes bankrupt, the bank loan interest and bank loan will have to be paid before the shareholders. So the outsiders party, the people providing the debt financing will be happy, and they will have no risk. Okay, the outside party, the third party, they will not have any risk, and they will be liable to pay, and they will be owed, not liable to pay, they will receive the amount regardless of whatever happens. Doesn't matter the company goes bankrupt, or doesn't matter for them. Okay, so, and the main point is that banks may not be willing to lend easily because already the long-term liabilities exist on their balance sheet of Q Limited. Okay, students, so that's what you have to write. Hope everyone got this. Clear on this? Any questions, any problems? Let me know. Any concerns? Okay, this is finished with this question as well. Make sure take a screenshot if you want, and we'll continue from here, students. Okay, understood? Got it? Done?
Yes, sir.
Thank you. Take care. Allah Hafiz. Bye.